And now we see Troy. Troy, great that you're joining us today virtually at minimum, but you've been, as I mentioned this morning, instrumental and helpful of us shaping the program as being on the advisory board of the USA conference. Troy is the Director of Real Estate for the state of North Carolina retirement system, managing the entire real estate portfolio, which I think is about $8 billion or so in assets. Troy, thank you so much for being here and joining us to give a view of a U.S. investor on the U.S. market, which I think is particularly interesting to all of our German and Dutch investors that we have in the room here today. To start, I think everyone would be interested, can you give us a short introduction on your plans, real estate exposure, geographic risk and sector weighting, and then we'll go into a little bit more questions.
Good morning. Good morning. Thanks for having me. Sorry I couldn't be there in person. I'm the Director of Real Estate at North Carolina. We have a portfolio of about $8.6 billion of NAV. More than half of it at this point is in separate accounts. Maybe $1.2 billion is in publicly traded REITs. The rest are in commingled funds. We're really moving more towards that separate account model and away from the commingled fund model. Geographic exposure, we're 85%. If not slightly higher, U.S. and the rest ex-U.S., mostly Europe at this point. We had some very small tail positions in Latin America and in Asia that are burning off, but probably won't be going back there directly, at least. Sector breakdown, we track fairly closely to our benchmarks. We're probably low 20% office. 35% residential. Unfortunately, we're below the benchmark on industrial. We're probably 23% industrial. We just can't seem to catch up. The benchmark goes higher and higher. We as much as we add to our industrial portfolio, we just can't seem to catch up. We're moving more into niche property types, self-storage, being one separate account that we just added last year. Small essential strip, non-anchored grocery retail is another. We're looking at manufactured housing. Probably what we do, anything new going forward is going to be more niche-y stuff to complement what we already have. Does that answer your question?
Excellent. No, thank you so much, Troy. I think that's an extremely helpful backdrop to understand what you're managing in terms of real estate. Looking back at the last 18